the liquidity inducement cycle, which is, of course, now we identified the liquidity. And now we need to identify where we are in the cycle. And that will be essential. That is so essential because you can literally do that exact cycle everywhere. And that alone leads to so many trades. It is crazy. And that goes build up, inducement, mitigation. Build up, inducement, mitigation. Build up, inducement, mitigation. It's always the same. And you will laugh so hard if you see how many times it happens. Again, the most common example is, let's say you have like liquidity in here, inducement, right? So that's first of all the build up, but guess what? Then you have like whatever, let's call it something like this. That's what they're doing in here. So cycle goes now. So you see something in here is getting built up. That's the buildup of creating these false support areas whatsoever, right? So that's the buildup in here, already building like some sort of short buy trend whatsoever. Then you're waiting for the inducement. This already is a point of interest in here, right? You can take from because this already took liquidity. But now after the buildup, we expect an inducement of this equal lows in here. What's the next thing that can happen? Inducement into mitigation. And out of a sudden, you're making three things aligning in the overall play. And guess what? This is the next thing that happens. And that will happen so many times. It's literally crazy. It happens every day, so many times. And we show you so many examples of that. Recent ones, old ones, like it doesn't matter. Just keep that cycle always in mind. It's build up, inducement, mitigation in that order. Okay, first you need a build up, then you will get an inducement. And then of course you're expecting a mitigation with the inducement. So first thing, what's the build up? On very easy explanation. So pretty much that's how it looks like, right? So the retailers at this stage, because again, they fighting for buyers, sellers, who's in control, whatever. They're making a little face off. What are we doing? We're like, okay, just dancing. We're just waiting it out. We're not interested in the build up at all because again, we don't want to be when they're a little exchange in here when they start shooting, right? We don't want to be that. So we're just waiting it out. We're just dancing a little bit. But by definition, if you ask our friend Google again, it's really interesting. If you type in the definition of build-up, pretty much says, if you look at the second one, a period of excitement and preparation before a significant event. Before a significant event. Does that already connect a few dots in here? So when they're building up, what is the significant event then? It's of course the inducement. And now if you look at the first definition of them, typically something negative that leads to a problem. Okay. That's kind of funny, isn't it? That Google gives that type of definition for a build-up. Something that leads to a problem before a significant event. It's also negative. Okay. Perfect. I mean, that perfectly fits our definition, what they're doing to the retailers. They build it up like a negative event that leads to a problem. Then a significant event happens, which is the inducement. And then, of course, they're out. Funny enough. So very easy to identify can be, of course, trend inducements, like whatever they're building a channel. They're building like these equal highs, equal lows. Again, the most easiest one to spot is on low time frames to just give whatever, something like this. Equal lows, and they're inducing low. Go higher. That's the most easiest form of spotting it. But of course, it's mostly also these channels things. They love to build channels. They love to build channels the other direction and also these sideways actions. Okay, so how does it look on the charts? Of course, very easy. As you can see, building up the channel upside. You already noticed what that is. Does it connect the dots already? You already see the sideways action here. You already know what that is. And of course, they're doing the same thing in here without the Asia, but you obviously can connect the dots yourself in here, right? So what is going to happen? So we make a little quiz in here. So just prepare your chat because you need to write in something now. So if we have this picture of the overall day, where are our main build-ups for the day? Is it A? Is it B? Is it C? Is it D? Or is it E? Main build-ups. So can be 2, can be 3, can be 15, or can be 1. The answer is B and D. This in here is an Asia range, and it has no significant structure. It's not Asia low, it's nothing. It's just like a very momentum random switch inside Asia range. But as you know, we focus on the main build-ups with this false channel until what? Breakout of Asia. Or this sideways action building the wrong channel. Sideways action consolidation until what? It's a click. Right? This thing in Asia in here had no impact. The main build-up is this channel building until, guess what? London session opens. This time it's Frankfurt. Building the wrong side. Then going sideways. Building up even more sideways. Guess what that is? And guess what the direction is? Main build-ups. Right? So, main build-up out of Asia. Guess what? Look at that. If you take this one in here, just flip it upside down as we did it here. Obviously, that's a different chart. It's literally always the same anyways. Just remember this picture in here. And again, isn't that exactly the same thing? They're just building this channel until they're breaking out. And then go even sideways, making this thing in here. And then, of course, going upwards. Build up, build up. Significant event after. Build up, significant event after. Build up, significant event after. Make sense? Next one, more advanced one. Where are our build-ups? That's one interesting one because we have like a lot of build-ups in here. Let's see how advanced you are. It's definitely not only one. And now really see the details. Really see the details and start connecting the overall picture. Think what they're doing with a build-up and what comes after, a significant event. So if you see a build-up, already know what should come next. So the answer is A, D, E, G, H, and K. So why is that? Of course, you have the first channel, wrong side. Right, then of course sideways action. So whole A is a build-up. Then B, it's not a build-up. It's just, again, what is it? It's of course the inducement in London Open. C, not a build-up. It's just, again, huge vector candles to everyone in the wrong direction. It's a huge inducement. D, sideways action, channeling before significant event. E, channeling, building these equal lows before what? Significant event. G, sideways action below equal lows before what? F is not an, of course you know what F is now. H, sideways action before what? I is nothing. And now this is the controversial one. What does it do? Does it build up? Or does it actually induce? I know it goes a little bit sideways, but what's the main intention of this push? Inducing this structure low, and then obviously reverses. Then again, K, sideways action, inducement high, below. Make sense? Starting seeing it. And so how can you see how easily out of a sudden you can spot these areas when they're building it up, inducing low to go higher. Remember the example when we went over the whole weeks, inducement high to go lower, inducement low to go higher. They're doing it all over and over again. Building up liquidity, equal lows, inducing them low to go higher. Building it up here, induce low to go higher. Building it up here, induce high to go lower. All over again. Again, if this is the main inducement in here, what do they do before that? They want to induce even lower to go higher. They're building it up here, making the push inducement low to do what? Go higher. It just don't go straight away like this. No, they go like here, building up, inducing low, go higher, inducing low, higher. Always the same. Crazy. And guess what? Now if you look at the bigger picture, now we look at the detailed picture, but guess what? If you take a look at some hidden buildups, can you identify that already? That thing by itself is a buildup building the channel until what? Until the big guys jump in London and say thank you. This overall thing is of course an inducement, but also acts as a huge liquidity grab because everyone gets excited, break of average low, everyone's taking a breakout trade, everyone sees the huge momentum, getting excited, whatsoever. What do they do here? Building a huge channel upwards before what? Final inducement to do what? To go lower. So you see they're doing it on the really detailed pictures and on the overall pictures. Starting to make sense. Starting how we can connect easily these type of traps, and again, including the bigger picture of what they're doing. Right, inducing high, mitigating what? Huh? Interesting. Does it make sense now? That is start to make sense out of a sudden. Of course, it's always the 5 minute, as I told you. If you see this type of thing, and by the way, that is one whole day. That is how we break the whole day into one chart. And how we make so much sense out of the whole day, doesn't it? Out of a sudden. We know this is the break of structure. This is the inducement, should get mitigated. Let's start to make sense out of a sudden. Build up, inducement, to go higher into the mitigation. Interesting. This is the bigger picture inducement. London open, makes an imbalance in here, gets mitigated. Is that a trade or no? Maybe. Does it start to come together slowly but surely? And trust me, it will only get clearer and clearer and clearer. So hopefully you're seeing now at this point the intra or like the internal buildups, but also the bigger buildups. Again, as you can see, as we easily combine these two things together and let them melt together and still are able to build the overall picture in terms of like the timing, the age range being induced, London open, overall break of structure with the mitigations, with the little build-ups, inducement, and now finally the bigger picture, mitigation, right? And of course, then we can take it lower. So hopefully slowly but surely, it will make sense and more sense and more sense and more sense. And of course, we will not stop there.